over once you started, can I?
Yeah, I don't know. It just goes weird, but I think it works. I think we're
Okay.
live. Hello, good evening, happy Friday. Hi, Duck.
Hello.
I think everything works.
I think so too.
Nice. Mr. CMS, the M in CMS, will join us shortly. Thought we'd be timely with our appearance though, and have time to, of course, say hello to all the viewers. Thank you to Bybit for sponsoring Technical Roundup. Very chill of them. Their links are in the description. And make sure to subscribe and do all the stuff which YouTubers derive their self-worth from. You know how it is. Duck, how's life?
Um, Busy but good, I'd say. I mean, there's a lot of stuff going on besides the market, and then the market on top is just kind of crazy right now. So yeah, busy but getting. I mean, it's better to be busy when it's kind of this boring. In a real life sense, where you can't move, where you can't do anything, you're just stuck at home. So it makes sense to be busy in every other aspect of life. So that's just me basically coping, but yeah.
Nice. And there's Mr. Dan.
Hey, what's going on? Hold on, let me get my headphones.
Sure.
This will be better.
Okay. But yeah, it's good. It's good. How are you?
Yeah, good. I've been trading well, but closing way too early. I've literally been telling my friends, as soon as I get out of a long, just long, because I'll probably go like twice past where I exited. But that aside, it's been pretty reasonable, all things considered. Hard to keep track of like so much news, and the market just seems so juiced to react to everything, which is cool if you're on the right side of it at least. There's only really been one right side. So, I mean, that's pretty straightforward.
Yeah, any kind of good news has been pushing price up, right? And any bad news hasn't even kind of taken a foothold. It's just bad news, okay, yeah, whatever. Get like 5 good news coming right back to back after it, and it's like never happened.
That's how it should be. Forever.
Yeah. Yep. I mean, I don't mind.
Dan, thanks for joining us. How are you doing, man? Thanks for making the time.
Good. Yeah, thanks for having me. It's funny, I don't know what you sound like, obviously, outside of, well, anything. So, like, it's funny when you, like, attach a voice to a sort of like an icon on Twitter. No, it's good. It's been good to chat with you guys. Yeah, it's been wild. This is probably the craziest trading environment I've been in since 2017.
It certainly makes sense as a comparison, right?
It just reminds you, completely.
It's just different because like everything has so much more leverage now, right? Like you have a perpetual swap product for every asset, as like because like even BitMEX wasn't that popular in 2017. Like it started to at the end, but like the bulk of that mania, like it was just all spot. And now I don't know, you can do a lot more damage a lot quicker.
Yeah, I agree. Do you think that based on all these swaps and all these futures and everything that you have, that the spot markets are pumping more, pumping less? What do you think?
I think derivatives are leading most of the activity, pretty much. Like you can't fight the cash market indefinitely, but like that's really where like the action is. Like that's really where we see it. Like so, like we pay attention to like the cash markets and the flows, and like obviously all these big purchases coming across from like corporates matter a lot because that's like net cash entering the system. But like in general, like the day-to-day swings, like that's really like led by the derivatives.
Yeah. But like in general, do you think that the coins would go up further if there was none of that, or would you think they would go less far? Because that's something that I've been thinking about a lot.
I think it would really just be a function of like speed at which like things happen. I don't think like the absolute return and movements would be like that much different if they were like spot markets. Like I mean like think about how much stuff didn't have a derivatives platform in 2017 and how bonkers and jacked the valuations got, right? Like you don't need that to get there. It just like lets it happen a lot faster, I think is my takeaway from it.
Okay, yeah, I can definitely agree to that. I mean, in general, it's kind of hard to judge because like back then, if you just have a bunch of people come in and buy, right? And no one's really selling, stuff goes crazy. And now we have, actual like bounties where people just, if they go too crazy, funding gets too high, you actually get like some people step in and just completely run them over. But yeah, it's I mean, in the end it doesn't really matter, right? I mean, price goes up, but I think it's interesting to talk about.
Yeah, it's I think in general, as like an active trader, it's a like better environment to play in. But I think there's definitely this like pervasive disregard for like not just like leverage usage, but like financing costs in general right now. That's like probably not going to end well for a lot of people. Like I wonder, somebody made an offhand comment about it, but like I don't know. I think it was like CL on Twitter. Like I wonder how much just cash has effectively been moved on like all the perp products via funding from like longs to shorts. It's got to be $200 or $300 million now, maybe like $500 million, right? Like that's a lot of money just like changing hands for like that financing sort of related like cost. So I don't know, like that is going to be like probably something people are going to have to like pay more attention to soon. If they aren't already. I do worry about like sort of that, especially with like the retail community.
Yeah, I had a friend who, I mean, anecdotally, he made a tweet saying, I don't even know if I'm making money because, like, my position's, market's flat, but I've paid, 6 figures in funding, for example. So
Totally.
Like, it's like, what the fuck, am I actually up? I think when it comes to calculating cost of trading, it's really important, but most people kind of don't bother. Or their calculations just go out of whack when funding becomes what it's become,
Well, I remember when Compound first listed, remember like FTX put a future on it like almost immediately. And and everybody was like, this is ridiculous. It's too like jacked up. I'm going to sell it. And like, look, like that may have been true, but like that perpetual futures product paid longs, I think it was like 65 or 70 days, the entirety of the contract value. So like you bled out in financing in a little under 3 months, which is crazy. So like you could think like the token is the most dog shit thing in the world, but like you just owning it, as long as it doesn't go to zero, you're basically fine. Like it was like it's weird stuff like that happens where people just like aren't even thinking about it.
Which types of participants do you think are most adversely affected by high financing costs? Is it people who just don't know what the fuck it actually is and realize that like half of their balance is gone and their liquidation's like suddenly just below market?
100%. It's people that are trading on very high leverage that just like aren't cognizant of what the funding, either how it works or B, like the magnitude of it that like it sort of like compounds with.
Mm-hmm.
I think it's like those two, like it's like definitely like the less sophisticated folk that like are going to get like burnt on it. I mean, like I watch financing costs like all day. It's like a quarter probably of like what I'm doing, like just like looking across, like also because it has like predictive value and signaling and like where markets like flows are going, but even just like also to like pay attention to like what I'm bleeding out or like what I'm taking in sort of in a given day. But like, I know there's people that just go like, oh, like I'm 10x long ETH and like, I don't know, that's all I have to think about. And it's like, well, like if the market's flat for a week, like you may have bled 5% out and that starts to like really eat into you if you're 10x levered, right? Like people discount how quickly that funding eats at you if you're like very levered. So I don't know. It's just like, it's this weird gravitational pull that is always there that people sort of don't think about it, but it definitely hits retail like the hardest for sure.
Yeah, I remember still when ETH got added to BitMEX, where you had the Quanto and people just bled in funding while price was going down. That was so brutal. And now we have like a little bit of the opposite going on, where it's not as bad, right? When price goes up and you pay funding, it's like it's okay. But yeah, I still remember back in the day when you actually had like price go down and you still bled out in funding if you were long. That was brutal.
I think also to Dan's point, a lot of people, I mean, if you're not as informed with the products you're trading, unless I'm totally pulling stuff out of my butt, which happens frequently, funding is charged on the notional amount that you're trading, right? So even if
correct,
that's where the leverage fucks you, because it may not seem like much because you're highly levered or whatever, but it's the notional amount that bleeds you even more. So you're levered to the tits, funding's against you, and the market's moving flat. I mean, whatever risk calculations you had for the position initially kind of go out the window in a few periods, right?
It just it adds an element of like time to it that people like tend not to like think about, right? Like a lot of people think about these things like binary. They're like, all right, well, I think like ETH's going to 2000, so like at 1800 it's a do, and it's like, well, look, like if you're levered 5x and your notional position is such that you're going to like bleed this in financing, like you may be right, but now you have a clock. Like now it has to get there by like a certain time frame, or you're either A, gonna get like blown out on the thing, or B, you're just gonna like be flat and it's gonna like get there. So like it's weird. It's like, I mean, there's definitely times in the market we look at this too where we're like we may be like short term like very bullish and like think flows are that way, but like you actually still get paid better to just like be short, which is like a weird way to like sort of think about things, just because like the time component like that hasn't been true in a very long time. But like there's points where like the funding gets really stretched, and you look at it and you're like, look, like it's just like a risk reward. Like basically lending the cash out to the market here is like a better do. So yeah, I don't know. It's very interesting like how much like financing affects things and like how little it's like brought into the conversation of trading.
Do you think there's any good way to kind of hedge that, or is it just something that you have to deal with?
I think it's just something you have to deal with. I mean, if you want to avoid it more, you can just trade the fixed date future stuff, right? Like then you don't have to worry about the financing as much. But there isn't fixed date stuff for all the perps, and then the liquidity is not as good always if you like move out the majors too. So I mean that's like, or you just trade spot and you don't have to like worry about it at all. But then you don't get any leverage. I mean, you can like borrow, sort of like you do that sort of thing, but
then you pay again. Yeah,
you're paying either way. I mean, like right, like if you're just not levered, you don't have to think about it. But people want to be levered.
Yep.
I mean, yeah, go on, David.
That's kind of where the market's gone, right? Everyone wants to kind of make the most of it, and it makes sense. But it's always this kind of leverage build up, and then it explodes. You pull back a little, and then it goes back up again. And it's just this back and forth where it's just constantly. I think that's basically what's been happening with ETH, right? Where it tries to break out ETH, and then it just goes back down again, liquidates some people, goes back up again, goes back down again. Where it's always like you get this weird OI build up on the way up, and then these people get liquidated while the market is still going up. It's kind of crazy.
Yeah, you can see it, right? Like you just see it on like the Bybit open interest a lot of times. It's like, because that's like tends to be like where the frothiest action is, and you just like see it grow, and then it gets whacked. Yeah, I mean, it doesn't. I mean, look, like if you're in the beginning of that wave, like you're fine. But if you're like that last guy on the wave, you got problems.
You mentioned that you spend a significant amount of time looking at financing. I was wondering what other tools you may use to kind of build a picture of where the market is. Because I listened to you talk to Brian, and I understand like the the TA price side of things is like far less important, if not entirely irrelevant. So I'm just wondering, how do you kind of contextualize the market in relative terms? What goes into that cauldron that you mix together to get a view?
Yeah, a lot of what we do is look at like relative value type stuff, right? So like if let's say like Polkadot has like a big run and like Kusama has like sort of just like not done anything, like we tend to like view that will like have some like reversion, so we'll like buy the laggers. But like we do this on like things that don't necessarily always like make sense. Like for some reason, like in the first half of like 2020, like Tezos and Link had this like weird relationship where like it didn't make a ton of sense, but like it did for some reason kept happening in the market where like one would run and then the next one would, and it was like back and forth. So like we do like we look for things like that in the market that we know we can sort of play on, and then we'll sort of like take thematic like bets about like what we think outright like sort of is like moving in the like we really just try to aggregate as much information out there as possible, whether it's from like active like users of like some of these like protocols and chains, or like talking to the teams, or like talking to other investors, and like really just like trying to like get as much information flow as we can, and like think we can see where like the market is going and anytime like but it depends. Like you're in a regime now where like being smart is like not necessarily great, right? Like you really just like want to be like, all right, like this is where all the flow is going right now, like suspend disbelief for a second and just like get on board, like so that we'll pivot quickly if like the market is changing and like it goes through regimes of like what matters and like what doesn't matter at any given time. So like that's generally sort of how we're thinking about things. It's definitely like we look at the whole portfolio holistically in like Bitcoin risk terms, and then like we have like individual bets that like we think will have some edge in like a pretty short time horizon. Like we're talking on like weeks to months, sometimes days, like time frame. Like we're not taking like I think this is going to be like the L1 for all DeFi in 18 months. Like it's just like we don't trade on those time frames. We'll take like we'll do venture bets in that space, and we'll do like token deals that sort of like support that thesis. But like we generally don't like position the main book around that.
Do you have a benchmark? Is it Bitcoin?
I sort of. So we keep all the risk in Bitcoin terms. Like we always look at like performance sort of against Bitcoin. Though that's not like we don't like hold up like against it all the time and like think, but like I'd say in general that's like sort of our yardstick that we're like looking at. But we definitely think about risk in terms of that, of like just like net exposure in Bitcoin terms, which I don't know if a ton of desks do, but that's definitely like how we sort of think about it. And we usually will run like a pretty short duration beta for all the names to it to like get us to sort of like that calculation. But yeah, I mean, like it's probably a blend of Bitcoin and ETH. Like, I mean, like in a year like last year where like ETH like smoked it, it'd be like you like really need to be like performing to that versus like Bitcoin. But I'd say like we haven't had a hard time beating either of those thus far. So like we haven't thought a ton about it, but it's also been like a really good market for like alts, right? So like there's a lot of things that have outperformed both of them. So that makes it a little bit easier to sort of like beat that. But it'll be more telling, I think, when we like hit like a bear market type situation of like how we start to like think about that performance. And like look, like frankly, we don't have like investors, so we're not like really like shelling out a benchmark type thing all the time. It's really just like for internally how we think about it.
Yeah, I think like most people have been around for a while. At least, I mean, now it's changing a little bit, but I think most people that have been around for a while kind of think in the Bitcoin term. And I think it's changing now because you kind of get a lot. I mean, most exchanges start trading against stables, and in general, the volumes coming into stables. Do you think that's going to continue going, or do you think it's going to still be the same?
Probably. I think like there's a tendency for like new entrants to think about things more in dollar terms, just because so much is priced against dollars. Like it's kind of the old guard that like is used to everything trading against Bitcoin as the cross. Like you see like all the growth, it's really like in the dollar. Like think about it. Like every futures product is like dollar basically.
Yeah.
Like BitMEX has like the legacy sort of stuff, but like even that's like falling out of favor. So I think there'll be like a tendency for more people to think in like dollar terms and like stables like going forward. I think we're definitely of a dying breed that thinks in that Bitcoin related sort of terms.
Yeah, I agree. It's kind of sad to see, but then again, I mean, it makes sense. You get less risk, less systemic risk anyway, having that, in my opinion.
Yeah, and there's definitely like a point where you hit a certain size where like for accounting reasons alone, you have to like definitely think more in dollar terms.
Yeah.
So, I mean, you're trying to capitalize a lot of information flows, right? And it must be absolutely mental, like with the market right now, with DeFi and then Bitcoin narratives, ETH narratives, and layer ones, layer twos, there's a lot. So in terms of executing on these ideas on whatever time horizon it may be, how much discretion does sort of play a part in that, both in terms of sizing, which ideas you really pull the trigger on, conviction, management? Do you view it in those terms at all? Because I know it's not like some automated high frequency trading type of thing, I assume, certainly not for the longer term bets. So how does the actual, how does an idea go from, something you discussed to seeing something there to actually executing? Is there some sort of process you can divulge?
Yeah. So there's 9 of us at CMS, and then of that 9, there's like accounting, there's like developers, and like so let's say there's like 5 guys at any given time that are like looking at like risk, like looking at like assets and like sort of market stuff. So like generally it'll be we all share one book, so it's like one big pool of like assets, and it'll generally just be like, all right, like I like X for Y reason, right? And like it's pretty quick, and like they'll just say it in chat, and like we'll like talk about it for a couple minutes. And then once we decide, we're like, all right, this makes sense. Like, we think this is a do. It'll be like, all right, well, how do you want to do it? You want to buy it outright and like just sell like net market exposure to it? Do you want to like pair it off against like another name? Do we want to add risk in aggregate here? Like, what does the financing look like to do that? And like, it seems like those are like a lot of questions, and it like take you like a long time to get there. But it's like, it's sort of just like fluid now. Like we like know the answer to most of those questions like immediately. So like I mean, especially like the last like month or two, like it's just like, all right, you like it, buy it, and just like strap in. But like in other times, we'll be like, listen, we like this. Let's see if there's like a pullback in the market. If there is, like, let's add this name into like our bucket of risk. So like we tend to have a list of names of things that we want to add to that we just always keep around. And if there's like a big market shock to the downside, we'll like try to use that as like an opportunity to grab things, especially if there's like a name that we really like that's just run up a lot and we just don't want to chase it. We'll like wait for like some of the leverage to get like sucked out of it to like point. Like we've done that a lot throughout the year. Because it worked. Like you'll get these flushes of like leverage in particular periodically, and like that's like a good time to like add things that you were looking to otherwise. Like we don't like to chase stuff. We like think that's like a pretty easy way to like end your sort of trading career like slowly. So we will wait for like better like levels if we can, but like that's been hard. Like it's been like you haven't gotten a lot of cracks at that the last 12 months.
Yeah, it's buy now or buy higher has been
Right,
recently.
right.
I was just telling the duck off stream that like if you want to get a good long entry, wait for me to close my long and then just buy that, because I'll usually just keep going by a fair shot. I assume you look at some combination of open interest and some sort of normalization in financing to get an idea of when a flush has occurred, or do you just look for big red candles and like, yeah, there's someone's on the wrong side of this?
Yeah, so usually, I mean, the big red candle is definitely the initial tell, but then like we'll look at like, all right, like what did the purpose of financing like shock to, and then like what did the back of the curve on Bitcoin and ETH do, and like that movement of the back of the curve tends to give you an idea of like the order of magnitude of like the leverage movement. So like that, and like we tend to be short the back of the curve as like a hedge. So like we like roll a big position of like our cash at any given time through that, unless like we really want to get long. So like we'll close that out on like big flushes as well to like just like get net betas and then like use those betas to buy names that we want.
Do you ever find you get sized out of ideas you really like, or get partial exposure compared to what you wanted? Has that been a thing both with how price has been moving and just generally with the size you're trading?
Yeah, it's happened. Look, it's a good problem to have, and it's definitely been sort of an issue. Like there's like it happens that like somebody will come and like pitch. It'll be like a rent, and like I don't want to like pick on any like coin in particular, but it'll be like some Uniswap thing and be like, I think we should do this, and you look at it and it's like, look, like if we put 250 grand onto this thing, it's gonna take a whole day. You're gonna move the market 20%. Like this is generally like probably not gonna make sense for us. Like even though it like probably does have value, so like we definitely have cut parts of like the smaller universe off, unless there's like a way that we can get liquidity. Like that's just like not necessarily like apparent like on the screens, but yeah, it definitely sizes certain like assets like out of it. But what's like crazy is that I think people don't understand this always in the market is like when those assets that we like, if they get bigger and more liquid and it like looks like the trajectory is still going, like we'll buy in then. Like just because like we didn't like do it when it was like really cheap. Like a lot of times it's just like we got other stuff going on, and like I have to like use the balance sheet like at that like moment, like I don't have time to like waste a trader like clicking on Uniswap all day. Like if it like gets listed and it gets liquid and we like still think the thesis is intact and the valuation makes sense, like we'll add in there. So like the follow on like thing there is not like we're not idiots. Like we weren't like not aware of it before. And like I think I see this on Twitter sometimes where people will be like, oh, these people are like buying our bag. It's like, well, like, or this is just like the logical place for them to like enter the market. Like that's just like sort of how things like there's entire industries of late stage growth venture companies that just come in and buy basically the highs on like startups, you know, like that's like a model. Like it's not like necessarily that they don't know they can get more bang for their buck small. It's just like they have a certain check size that they're looking to like cut on that makes sense, and like they do it when it gets to certain things. So I think that's like an important thing people should think about like in the market of like sort of how assets like grow up through the life cycle.
I mean, it's pretty similar to what happened with Bitcoin, right? Where you've had very, very rich and influential people come in and be like, this is more interesting now at 20, 30K than it was at 10 or 5. And people make fun of it, but I mean, there's a reason why they're saying it, right?
Totally. Like, well, because you got to think about it, right? Like Bitcoin, you can look at Bitcoin and you can be like, well, it went up and like that was dumb. They should have put it in there, and be like, all right, well, listen, like if that guy got pitched 100 things that look like Bitcoin at that size 5 years ago, like how much time would have that taken to get on all those things? And like, would have the net sort of like been a win? Like probably, because like Bitcoin was such a win, but it's a lot of tax on like operationally like doing something like that. So you gotta remember it from that vantage point of like things don't always work out also when they're like super cheap, and like there's a cost to that time and that like research and just brain power that like goes into all that stuff and the management of it, and like so. And yeah, I think that's generally true. Like asset classes evolve as they get bigger.
Yeah, I agree. I think for me, at least, the all-time high break above 20K was just like huge validation in so many ways. That, you know, the bubble is back, but like not really a bubble anymore, because all the tulips and other crap, like supposedly those analogies were valid because they never really made it back up to their original levels, or certainly not in like a long time. So when that happened, I was like, okay, there's probably something here, right? I mean, my conviction was built in before that, but of course that kind of stuff really helps make the case, so that makes sense. But as stuff was going up, people always, I mean, probably one of the most common questions I've had was, you know, how do you know when to take profit, when to take some off, or have cash ready for a dip, etc., etc. For your shorter term or even medium term stuff, and, you know, knowing the volatility that we get, what kind of lens do you view sort of either profit taking or closing positions? You know, how do you conceptualize that within your system?
Yeah, so like, I mean, there's definitely like points where like the valuation just gets so divorced from where you like thought it like made sense, right? Like you could buy something and be like, listen, like I look at the comps in the market, like I think like this can like whatever metric you're using, if it's TBL or like whatever, like net usage or like whatever, like it depends, like obviously per asset, like it's an L1, like how much usage is this, and like you can look at that and be like, I think it's gotten to the point where like price wise I like would have been like agnostic to it, and then you're like, all right, well like now I'm sort of like I could use this as if I just like need to sell deltas, right? Like if I just need to like net like reduce exposure, this is like probably a name I can like grab and like reduce some risk. Versus like if it's like, all right, this thing is way beyond where like I would have like ever cared about it, then you're like, all right, like I should sell this and I should like buy something else like against it to like balance out the risk. Like then, so like we really, that being said, like every one of those decisions has basically been wrong the last 2 months, right? Like because like everything is like not only like exceeded like where you thought the logical like valuation of it was, and then just like kept going. So like we like look, we've been like net sellers of risk for like a little bit here. It's not like a bad thing. It's just like we think some of these things, like we would rather pull that money and push it back into like Bitcoin and ETH, and just like sort of keep it, or just like roll it on the curve, like on the cash side. So like we will still keep like a very large position of like risk at any given time, but there's certain things where we're just like, this doesn't make a ton of sense for me to like hold, where I think the valuation is like ultimately going to like settle on it. And I don't know, that tends to like stuff in crypto in particular, but even in like equity markets, they have this tendency to go from like very, very cheap to like very, very expensive, right? Like they don't just like baseline back to like the medium like valuation sort of thing. I mean, it's hard to know what that like real value is, but like, but they just like overshoot it, right? Like shit always like flies too far in both directions. And like you just like want to be like cognizant of like, all right, like, I gotta like step in here and like knock this back down, or like this is a good point to like take it off. But yeah, like I said, like that's been a kind of terrible strategy, but like I think it's the prudent way we like think about risk.
I think in general, what's been happening, I totally agree with you. But something that we've seen is just a lot of just something goes up and then it gets name recognition, right? And then everyone wants to have a piece of it. And what we've been seeing, I think, especially end of last year, beginning of this year, is that a lot of people just like new projects come up and they've never heard of it. It's already gone up 10, 15, 20x. But they're like, oh, this is hot. I want to get some piece of the pie, right? And then a lot of people do that and the prices shoot up and never stop. And I think that's kind of what's been happening, right? Like, I mean, whenever you see a name drops anywhere, like GME, for example, in the traditional markets, people just, I mean, that's a name that they can buy, right? Because there's so many new people in the markets right now, in every market, basically. They don't even know where to put their money, right? So the moment they see a name like 10 times, they're just going to be buying. And I think the same is true in the crypto markets, where you have Linkfly, for example, in 2020, early 2020. And then it keeps getting brought up, and then people just keep buying in because, I mean, that's the name that they know. Or like Dogecoin now, where you have Dogecoin just mentioned a million times. So all these market participants that haven't really been in the market before, they just want to have something that they actually know. And those are usually the names that have like that they recognize, right? And that's why I think they just run so hard.
There's a formula for that like marketing people know. Like I don't know it, but like how many times you need to hear a name in like a certain time frame for it to like stick. So like it's true though. Like there's some like real value sort of in that like repetition like aspect to it, of like, and then it becoming relevant. And like, it's wild. Like we live in this time where people like just generally are like, I feel like trading in general the last like 3 months has just been very divorced from like the asset in particular, like at all. Like you're just like, everything is just all flow and like memes and information. Like it's just like, it's kind of wild. Like obviously like the things that have like some value are getting the most recognition and voicing out there, so they tend to also accrue the most incremental dollars. But like there's stuff that just has no like reason to have any value that's like just flying around because it just keeps getting talked about. So it's a pretty unique time, I think, in trading. I mean, I don't know if it's COVID, I don't know if it's like all the money that's getting like whipped around. There's probably some combination of the both, or just like the fact that now like trading itself has like some momentum and like everyone wants to do it because everyone wants to do it. So like it's just like gotten a life of its own. But yeah, like you see a lot of that like sort of thought process of just like everyone's talking about this, so everyone's talking about this, and because everybody's talking about it, like everybody's trading it, and everybody's trading it because everybody's trading it. It just like feeds on itself.
Yeah, I was going to ask you about the macro, like just generally what you think, and then what kind of impact it has on the decision making within CMS. So like, what, I mean, but there is kind of, it's weird because crypto itself has so many interesting emerging narratives right now. But broadly speaking, you know, if you're on crypto Twitter, we discuss the dollar when it's convenient. We discuss the S&P when it's convenient. It kind of seems to be all over the place, but people are kind of developing some sort of appreciation for what's going on beyond us, and we seem a bit more affected than maybe before. How do you? I mean, what's going on in the world in Dan's mind?
Yeah, so I'll say this: like I know. Look, you ever like trading a market and you just know you're the dumbest guy in it, and you're like, I'm just like getting. If I'm making money, it's random, and like I'm definitely getting like toxic flow. Like I mean, I obviously definitely feel that way. Like, because I do some like angel investing and like regular like equity stuff, and like sometimes like you get like a pitch deck and you're just like, I'm getting pitched this because like they know I'm the fish, and like so I know enough to know when I don't know a market, and that is true for all things global. So like I tend to just lean on like other people's thoughts on what they're saying because like I'm not in these markets day to day. I can't really tell you like what people are thinking, what the flows are, like what like the forward guidance is, and like think about how much you know about crypto and like how much more you know than an outsider. And then like that's like how I obviously feel about sort of the macro thing. So with all that being said, I tend to glean my opinion from like people that I trust that like interface these markets every day. And like the general consensus seems to be that like there's definitely going to be some inflation in the future. Whether or not that matters for Bitcoin is like a whole other conversation. But just like the idea is that people are acting as if every asset in the world has to go up in value because like there's just going to be a constant stream of buying for like everything. And like you definitely see this in housing prices, you see this in equity prices, you basically see it in anything that like has value that people are just like trying to buy it hand over fist. And there's just like an incomprehensible amount of money like following onto it. And we see this in the fundraising side for crypto in particular. There's a ton of funds out there right now raising, and they're all getting money, and they're all getting large amounts of money, and like that flow matters, and like it ultimately ends in crypto. So like those in particular, because they definitely want to get in crypto. So now that crypto is like a large enough of an asset class, it's just like it's going to get like some of that knock-on effect of like wealth creation. And I mean, I'm not involved in this world at all, but like what's going on like in the SPAC market in like the equities world seems to like make crypto look like tame in comparison. So like, but like, look, that's just like money getting into a system with like a bunch of people that have like a really high risk tolerance. Like some of it will find its way sort of in this thing. So like, I don't really care too much about like, oh, like Bitcoin's the flight to safety versus like in inflation sort of like world. I think it's more just like, look, there's a ton of hot money flying around in the world, and like, it's going to find its way to crypto. So you might as well like take that like data point into consideration. So that's sort of like where I think like, I have no idea like what's going to happen to the dollar short term, like what's going to happen to like metals and all that stuff. We look at that on a day-to-day basis, but like, frankly, like it seems like noise most of the time. There was a period in March when like the bottom fell out, where like the whole world went risk off in every asset at the same time. And like, yeah, like we were glued to equity markets because like the world was glued to equity markets. Yeah. So you had to like be paying attention to what was going on there. But like, I don't know, if like the Qs are up 20 bips on the day and like Bitcoin's down 5%, like I don't draw like a lot of be like, oh, like it's cheap, bro. Like I don't price that into a ton. But like the equity market's grinding up every week, and like everybody's talking about like buying tech stocks. Like, I don't know, like that wealth creation matters, and I think it matters for asset prices, and like crypto's like a slug of that. So I don't know. I think what's going to be really interesting is the Coinbase IPO. I think that's going to be big for the industry as a whole. I mean, one, it's going to be a lot of money net flowing into like people that like crypto and like will probably do other things in crypto. So like you can't discount that. And then just like also like the validation of like having like a real large public equity is like an investable deal. It's going to be good overall for the asset class. So I think that's something like, what's up?
To that, do you think that the IPO of Coinbase is gonna like get new people in, or do you think it's gonna just get people that are already in to kind of buy it up? Because I mean, I've seen the argument flowing around that it's gonna take away the Bitcoin bit or some of the Bitcoin bit because people can get exposure in a different way. And
I think that's a bad take.
Yeah,
I think it's mostly people that either can only for structural reasons interface equities that are looking for exposure that will get exposure, or it's people that are just like looking to add incremental exposure with like a vehicle that has like a different risk profile. I don't think it's like somebody's like, oh, I can buy Bitcoin or I can buy Coinbase, so I'll buy Coinbase. I think like most of that flow is going to be like people are like, I can only really allocate to equities. I can only allocate to equities of this size and like this like sort of like risk profile. So like I'm going to put it sort of in there. I reject the idea that like a really high print of a ton of money going into Coinbase is like bad for like the underlying assets. I think that's like a bad take.
Yeah, I agree. It's just one of the. I mean, there's always these people always try to kind of find the contrarian view, right? And whenever you have everything bubbling like it is right now, it's something that I've talked about a few times in the last few weeks to months. Is that whenever everyone is on the same page, right, and everyone's just kind of seeing prices go up, it's usually not necessarily the best bet to look for the contrarian take, right? You're not necessarily trying to counter trade everyone, because if you do, you're just going to get run over by the crowd when it gets too crazy.
So look, sometimes the crowd's big enough that they just like force themselves right too, you know, like there's like that reality too, where it's like everybody thought Bitcoin was going up when it was going up, and it just kept going up, and everybody was right. So like I agree. Sometimes like it makes sense to be the contrarian when things are like super stretched, but like the crowd can also just like force itself into like will, right? It can just become the actual like truth that it's like seeking. So that's the other thing you gotta like watch. I find like it's a delicate balance. You gotta like see, you gotta like just basically tell where that inflection point is of like, all right, where is this like unsustainable? Like how much more net capital needs to move in for this to like make sense, and like where can that capital come from?
Yeah.
Is there any way that you can kind of calculate that, or do you just do it by feel?
I mean, it's feel and financing. I mean, financing is the best thing that we can find in the market that gives you an idea of like when things are like too stretched. Just because like it's like the purest way of seeing like how much people are like reaching.
Yeah.
But it's tough, right? Because like crypto is so small to like relative other things at times that like you can have jacked financing across the board and everybody's paying 75 bips a day to be long, and just some billionaire comes in and like buys $500,000 of Bitcoin and just like moves the whole thing up, and they all like are right. Like you got to watch out for like that, where like the crowd is small sometimes in this market relative to like individual like idiosyncratic players.
In light of that, do you give a lot of weight to the Tesla news generally? I mean, both in the short term, but also kind of maybe the medium long term. Because I don't know about you, but the name Michael Saylor didn't really mean much to me before his public Bitcoin buying spree. But it feels like Tesla and Elon Musk. You're welcome for me having to say that name, Don, by the way. You know, you've got Tesla, Elon Musk, maybe copycat behavior. This is the fourth biggest company in the S&P 500. Maybe, I mean, he's always been a bit of a rogue, but for many, that'll be some kind of basis for copycat allocation, validation, etc. Do you kind of see this as a key turning point in the near or even distant future?
I actually don't, and I feel like this is like a opinion that like a lot of people don't hold because they don't want to think the otherwise. I think like Elon does what Elon wants, and like that's very like much been the ethos of like Tesla, and it's like worked out greatly for them. But like I think most of these other places, it's absent a very charismatic sort of rogue CEO who has like a ton of like power over the board and the corporate, like it's going to be very hard to do. I think you're like this idea that I think like Apple's going to turn around and start buying Bitcoin. Like I'm very
they'll buy ETH, right, like, Dan?
I think in general they're going to stick to like super like low risk profiles. Like I mean, you can make the argument like why weren't these people buying like other inflation protected like assets before? You know, like it's not like yes, Bitcoin is like great and I love it, and like I dedicated sort of my life to this like industry, but like I find it hard to be like, this is like where you should be like parking your like corporate treasury
Sure.
like funds to like be like I don't know. I'm a little skeptical that this is like, you'll see some other smaller ones probably do
That's
it, but
what
I think
yeah.
this like general trend of like large corporates converting their entire balance sheets over is like probably not like a trend that's kind of like they have like other vehicles to like use with that like cash for like protection that I think are better suited to like their risk profiles. That being said, like Tesla doing it's like such a bigger deal than MicroStrategy, because like MicroStrategy's core business is sort of like, it's weak, right? Like the stock hadn't done anything for a really long time.
Yep.
Like they weren't like, it wasn't like a name that like people were talking about every time. Like this is it has been great. Like as a corporate like trade, like they crushed it. They made like they put more value into that stock in the last, call it, I don't know how many months, like since he did that, like 4 or 5, then like probably did like the last 10 years combined.
For sure.
So like it's great for them on that thing, but like it's really hard to like draw parallels from that to necessarily another company with like who's got a business that they want to invest in R&D wise, or there's like perhaps like corporate M&A they want to do with like the balance sheet and things like it's just I don't know. Like you're basically just saying like the rest of MicroStrategy's business is irrelevant and they just like hold Bitcoin. And like how many companies can do that? You can't like half the S&P isn't going to be able to like pivot to that business model. Right. A lot of them are going to like be more concerned with like sort of the core like function that they do as like a corporate. Like so I actually am of the opinion that like Tesla doing this, like if Tesla like really does this, right? If they like start converting all of their cash and they start like moving all the, like what do you want to own at the end of the day? Do you want to own MicroStrategy, which is this sort of like this one trick pony where it just like owns Bitcoin, it like has some cash flows that it moves over? Or do you want to own a growth business that's like crushing it and like has like a ton of money that can potentially buy like even more Bitcoin? Like it's bearish MicroStrategy, bullish Tesla, like as a pair trade. The problem is like Tesla's magnitude of like what they did on the balance sheet isn't the same. So like if you want the pure Bitcoin trade, you still like go with the MicroStrategy side of it. But I don't know. That's sort of how I think about the whole thing. That being said, I don't trade either of them, so like I like this is all just like me guessing around. Like I haven't done a ton of like work like diligencing it.
I think I may be mistaken here. I mean, given, you know, again, also who I'm exposed to and who I speak to is always going to be skewed and stuff. But I think a large portion of the market, certainly in the form of leveraged participation, is more or less expecting kind of continuation in the Tesla theme, right? Which is the, you know, Tesla kind of starts off the dominoes, if you will, and everyone else follows on. I think it'll look rough if that doesn't happen and things kind of flatten out from there. It'll almost look like the Elon profile, you know, the bio change on Twitter, just like maybe on a high time frame. But there's other stuff beyond just kind of Tesla, right? You mentioned the Coinbase IPO, BlockFi IPO. There's like a lot going on, which isn't contingent on these S&P 500 companies, right?
Yeah, and you have like professional risk managers with large balance sheet like allocating to it, which is where that trade makes sense.
Right.
Like I think like look, if you're, let's just like take like a crazy like thesis on thing. Like let's say you're a company, you got $5 billion of cash on your balance sheet. Like, what should you do with that money versus like what you're currently doing with it? Should you buy a bunch of Bitcoin with it, or should you give the money back to your shareholders? Like, it's not clear to me that the answer should be like, oh, you should like go buy Bitcoin. And like, I'm not like even entirely sure that that's like the conclusion they'll come with. Like, I mean, obviously they'll do stock buybacks and all like the stuff they traditionally do, but like, you can just give it to the people to decide to do with that risk. Like, I don't think people are giving you money to run this company and to like speculate on cryptocurrency. Like I think that's like a general like thing that the market will agree with. So I don't know. I feel like everybody wants to believe that that's what's going to happen. So like it gets the most play, but I'm cautious about like that whole sort of thing. I think you'll just see much more of like the growth of like real ticket sizes getting punched from like traditional asset managers, which I think is the right place for that to be happening.
Yeah, I mean, in general, like not every company is set up like MicroStrategy where they don't really need the money, right? I mean, MicroStrategy has like, I mean, I've not read too much into what they do, whatever, but I mean, they don't really need the money they have.
They're a Bitcoin
around,
hedge fund,
right?
Don, right?
Yeah, so yeah, they're crypto hedge fund. No, so it's kind of like, I mean, if you're expecting that like all these people or like all these companies start basically gambling on the Bitcoin price by, I mean, if you're just converting like 10%, that's very different from just going all in, right? Because for some, I think that would be pretty like a Bitcoin move of like 50% would be quite significant, right? If you're going all in. So I'm not even sure if you would want that to happen, because I mean, if you get that, you get like a crazy price hike, and then all these companies are kind of reliant on Bitcoin going up, and I mean that's not necessarily something that you would want to have on a risk basis, in my opinion.
Yeah, it's not even so much like and you may even like want that risk, but like, should you be giving somebody else money to then go like do that risk in like a corporate equity structure? Like, I don't know.
Yeah.
Like, I don't know. Like, the whole thing feels weird to me.
Yeah, I agree. I think the effect I'm kind of hoping for, I mean, if everyone wants to FOMO in and, you know, buy my bags, to use that phrase again, I mean, feel free. I think at the very least it makes for an interesting sort of middle time frame, raise the discussion, because, you know, this is like big high profile move. Maybe they actually take Bitcoin seriously as a result, research, and kind of make it a non alt-right Ponzi or whatever, you know, climate destroying Ponzi or whatever the average understanding of Bitcoin is, which I don't think is as positive as people think outside of our community. I think there are some assumptions there as to what Bitcoin means to the average person, probably a bit uglier than what we're used to when discussing it. At least that's my personal view.
I'd say that's consistent with what I say.
Yeah, yeah, that's my experience as well. I want to ask you about some intra crypto trends, which you may or may not find interesting. And you mentioned layer ones and scaling, and especially with, you know, ETH being where it's at, with gas fees being prohibitive for a lot of people when they want to interact with smart contracts or participate in that ecosystem. It felt like for a while we kind of gave up the battle for layer one, and now it's kind of reared its head again in kind of late 2020. And now, how do you perceive, or you know, any positions on just scaling, layer one tech, Ethereum, anything kind of spark any passionate ideas when it comes to that side of crypto?
Yeah. So we've been definitely bullish on this like L1 thesis, like for a bit. I mean, look, like, I think, and I want to say this, like, I think ETH's always going to like have that like dominant market share, and like there's always going to be like the biggest use cases with the most value sort of like operating on that. But like I've become a little like pessimistic on the like that they're going to get to a scaling solution fast enough to be able to like give the market what it needs. And I think what's going to happen is you're going to see like the fringe use cases and like sort of the new sort of like use cases for specifically DeFi, because that's like where the biggest like throttle is right now, but even like potentially other stuff, just like moving to other chains. So like, I think that is going to happen. And what I find funny is like the ETH community in general, like hates this idea, and they like think it's always like going to all be on ETH, and like, and it's just odd because it always harkens back to me to like ETH's whole like argument of Bitcoin itself, where they're like, oh, you have to be able to do more things and you have to put like more throughput to it. Like when the original like ETH Bitcoin sort of like fighting happened, and now it's like it's just happening again, and they've like become the other side of the argument. And I don't know, like I do think that there's going to be like real incremental value put on some of these other L1s. I mean, like you see it, like FTX is just basically forcing Solana into the equation.
Yeah.
But like even some of the other ones, like that we've like played around with, like they work, they're performant. Like there's an ability to pick, and some of them are like doing the ability to bridge stuff from ETH like really easily, right? Like a Box has that bridge, like Binance has that bridge. Like there's enough there that like people, the switching cost isn't insurmountable, I guess is like the big thing for those things. So I do think that's a trend that's going to like continue, unless there's like some massive throughput increase in ETH in a very short period of time. But I think it's just too far off, and there's just too much use case and too much like value trying to push through the system right now for it. Like ETH is somewhat broken. It's so expensive to like transact for a lot of this stuff. It cuts out so much of the market. Like those people aren't just going to like drop out. Like they're going to go somewhere else. And I think they're going to go to like the other chains. Like I would be not surprised if the majority of stablecoin transaction volume is off ETH in like 18 months. Like that wouldn't surprise me. But like I still think like the main big transaction sort of like logic and like settlement is going to happen on the ETH layer. But like you'll see like all the small stuff whipping around, like maybe on another chain. Like I think that's like completely reasonable.
You think it'll affect trading? So we've seen shifts already with CME just gobbling up a lot of the offshore volume that we may be used to. Do you think it'll go in that direction as well?
Wait, what do you mean? Like, do you think more will go on the regulated platforms, or more will?
Yeah, regulated platforms, or even just trading. You know, like on Sam's projects away from FTX, like trading derivatives on the blockchain, so to speak.
Yeah, so I do. Like we're investing in a bunch of these, but like I do buy the thesis that like a significant amount of transaction volume is going to happen on chain.
Right.
And like also, so here's the thing, right? Like if you believe that, you also have to kind of believe that like one of these other L1s is going to like pick up some of the slack.
Yeah.
So like those two like bets goes hand in hand. It's useful, and like look, it's not perfect yet, but like some of these solutions are getting like darn close to something that you would use as much as like an existing exchange, and especially if you like you cut out the custody, like, and like look, let's be frank, you cut out the KYC AML side of it, which is like a huge problem for like a big chunk of the market currently, because like it's getting very hard to operate as somebody out of the US. And then you also like get potentially more uptime, right? Like these things might stick around and be like much more robust than some of the centralized venues. Like, I mean, you still see the big exchanges going down constantly, and like I mean, I don't know, the chains stay up like a lot more sometimes. So, but like that's probably the weakest of like all the arguments I made. But I think you're going to see, I would bet you see in the next year, like, one of these like sort of DeFi protocol perpetual products punching as much as a top 5 derivatives exchange. Like, I think you'll see that. And I think that will be like a trend that continues. I don't think they'll ever beat the centralized venues. There's just like too much, like there's too much value add to like having everything in that centralized fashion. Sure. But I think they're going to eat a big chunk of the market, and they'll always be like a good option. So I do think that's a trend that will continue.
Yeah, it's a very interesting investment thesis. I mean, I agree. I mean, there's already writing on the wall, right, with regard to where the volume is shifting and how. And I just think if you're going to be like one of those, I think you even mentioned it with Brian, and I agree completely. If you end up kind of in the middle of all those centralized exchanges where you're neither here nor there, and you're feeling the squeeze from all the KYC, AML requirements that only seem to be getting harsher, you're probably going to be priced out of that model, right, or pushed out either way.
Totally. Like if you're a mid to small tier, like crypto to crypto venue that doesn't like really offer any like native banking solutions, and your entire existence is like listing the field of assets to like trade, like your days are probably numbered. Like that is not going to be like a defensible business model going forward.
Yeah, that used to be more than enough, right? You just list stuff early without really caring, and that's it. You'd guarantee volume. Whereas now, if you don't have fiat on-ramps, everyone kind of raises an eyebrow.
Yeah, that's where Binance came from, if you think back. I mean, Binance started as, okay, we just add stuff really fast. I mean, they added Neo, they added most of the Chinese stuff that you couldn't really trade anywhere else. And then they became big. And then you had KuCoin come in and all these exchanges. And I agree. I don't think they do particularly well when that like falls away. Obviously, Binance has managed to kind of establish itself in different ways, so it's not necessarily like dependent on that anymore, but others haven't. So yeah, I agree on that.
Yeah, I do think like the big venues will just like continue to get bigger though. Like, and like there's just like it's always going to be hard for like decentralized venues to be able to compete with like all the synergies you get from like a very, very large centralized venue. So like I'm never gonna like go out and say that like it's all gonna go on the decentralized side, but I think enough of it's going to go that they're gonna be very large options there, and that they'll be competitive with like the mid-tier sort of exchange side. But like I think the dominant ones they're not going anywhere.
Is there a similar analogy that can be made with, I mean, you're privy to both sides of TradFi and also just crypto generally, right? The argument that, you know, DeFi is eating TradFi, I mean, I suppose the simplest version of saying that. Is there an analogy that can be made there? Do you subscribe to that investment thesis that, you know, maybe see DeFi as another thing, right? Centralized exchanges integrating DeFi features, they don't eat their lunch completely. Do you have a strong view as to dynamics or pressures that DeFi is creating, both for crypto native services, but also traditional financial services?
Yeah, I guess I don't think that DeFi is so small in comparison. Like it's just like, it's not even like a thought, right? Like its sizing in aggregate is just, I'm trying to think of an analogy to like explain how small it is in like context, and like I can't even like get to one. That's how small it is. Like
so
it's
really,
it's an afterthought. Like nobody is like, and look, so much has to happen, and like so many leaps have to be made for that to become competitive with traditional finance that it's just like, it's something I can't even like think about in like rational terms yet. Meaning like I don't see the path yet. That's not to say like maybe it won't get there, but like the biggest issue that DeFi is going to have that it's got to get over is that there's no concept of credit inside it, right? Like everything is over collateralized effectively. Because like you have recourse in the real world, and that matters, and like that allows the traditional financial system to operate with counterparty exposure. Like you're allowed to take risks to people, right? Like banks are in the business of doing this. They're taking risks constantly with like all kinds of counterparties, and until you can get to a world where you can do that on chain, it'll always just be so much more capital inefficient than what's going on in like the traditional finance world that it's just not competitive yet. Now, that being said, like maybe there's a way you get there, right? Like there's a lot of like people who are like thinking up solutions of like how you build like an identity and like a credit system sort of into DeFi. But like until you're there, it just like it doesn't make sense, right? Like this like idea that like everything is just like massively over collateralized. It's not sustainable as a competitive product to the larger traditional financial system. So I don't know. That's generally like my like sort of thought on it.
I think generally anything that can't fully leverage the legal system in these functioning democracies is going to be a bit of a disadvantage, right? I mean that's I suppose my one-liner version of it. But I think at least for crypto natives, that probably some. I mean, cool stuff's being built already. Maybe we keep going in that direction. But it's totally different orders of magnitude, right? Saying create an actual threat to what we have already versus hey, this is cool if you're already in crypto. I think those are two very different targets.
Yeah. Like people love to like draw like these like crazy like paths forward of like, oh, like every bank's gonna be out of business and you're gonna only be like using stable. It's like, all right, like calm down. Like it's like there's so many other things that are gonna have to like happen and stuff. Like, but there's incremental steps in that direction.
Yeah.
And I'm generally bullish first of all, I'm bullish like all of the like insane sort of like brain talent that's like been cobbled together like in this industry, and like I think they'll be able to like get to those problems. I'm a little more reserved in like how far I'm willing to like extrapolate that out like currently. So I don't know, like it's a long way of like saying like yeah maybe someday, but like let's just like chill a little bit with like it's still like super useful. Like we use this stuff every day in like a ton of capacity, and it's like massively like improvement in our lives. But like there's just like points where it's not competitive yet, and like it'll get there. Like we'll make those improvements, but I don't know. Like it leaves some still stuff on the table that like makes it very hard to clean. And like also at some point it's gonna have to like figure out a way to like bridge things to real assets. Yeah. Right. Like the entirety of like DeFi right now exists around the idea that like you're just staying in crypto, which is fine. But like think about how much of like it's all of it, right? Like the if you looked at like the entire traditional financial system in comparison to like the size of like crypto, like it's just like it doesn't make sense, like the comparison. So like you're gonna have to start bridging things that people need in the real world into DeFi at some point, I think, to like make it more competitive. Which like people are working on too. Like there's stuff like I mean people are thinking about, and like smart people are thinking about all of these like problems and like how to like bridge solutions. But I don't see anything yet that like is a compelling argument that they're winning. Yeah,
that's like one of the criticisms, right? That a lot of the DeFi ecosystem is like circular or self-referencing. You kind of move from yield farming tokens and then stable coins and ETH, etc. But or even synthetics, which you can use in different parts. But ultimately, it all kind of it's a closed circle sort of thing. I suppose that's one of the criticisms. It's all
based around trading crypto, which is like fine. Like that's a use case, but like that's. I'm not a buyer of the thesis that like humanity's like end goal is to like move tokens around between each other. Like I think that there's more going on
man.
There. And like, look, as somebody who moves tokens around for a living, like I'm super pro if that's like where it all goes. But I don't know. I think like other things are bigger, and we'll figure out a way to get there. But we're not there yet.
Yeah. Doc, I've been asking a ton of questions. I've got one more, but do you have anything you want to ask Dan before I go in with a haymaker?
I mean, out of left field, I mean, in general, we've been talking about ETH kind of being, or you've been saying, and I kind of agree, that ETH's been a little bit on the weaker side, generally speaking, just based on how the fee's been behaving. Does that remind you at all of like the entire argument in 17 and then going into 18, where it's just been like, I mean, back then it was basically Bitcoin went up, and then everyone kind of discovered that, okay, we are having this fee problem, so everyone moved to ETH, and then everyone discovered, okay, ETH's having this fee problem, and it kind of just went from there. Do you think it's similar right now, or is it a little bit different?
I think I draw a ton of analogy to it. Like, I very much like view it as the same story like playing out again.
Okay, because then you could make the same analogy that it's probably gonna play out the same way again, right? Where you're like, okay, you've had this problem with these bigger chains. Now the smaller chains are gonna be used, and then you're gonna have problems with those, and then it's gonna just move down the ladder. Do you think that's gonna happen, or?
So I think I think people just like keep pushing out to like incremental sort of solutions. Like I think like, but this is like the thing, right, where like all of this like conversation happened in the 17-18 flip, where they're like all of this stuff will like fix all these problems with Bitcoin, but then like they actually had to build a lot of that stuff, and it takes time, and like the market has to like be receptive to it, and I think it's just like we're just like destined to sort of like keep playing this like movie over and over again, where like we like keep like, I don't know, you just keep pushing the boundary, and you got to go to the next thing, and you keep pushing the boundary, and you got to go to the next thing, and it's like, I don't know. I don't know. That's how I like sort of see it all playing out, is like there's still like a lot of work to be done on these L1s to like make them much more usable and competitive to ETH. But the use case is clearly there, and like the market's dictating that they want it, so we'll get it. It's just going to take time, and nobody wants to ever believe that there's time, so you go through that like pain and like the interim.
Yeah, that sounds about right. And yeah, it's always funny how the analogies almost just stick around but jump between chains. That's always funny. I wanted to ask you, I mean, in light, it sort of leads on from that. Something we discussed like in DMs and stuff is that doomers aren't like good people in markets generally, right? Because even if they're right, you don't make money, and it goes back to that old meme. Do you want to be, do you want to be right, or do you want to make money, etc. But understandably, some participants, maybe the 2018 PTSD ones, are looking, or understandably looking for signs of like froth in the market, looking for excess, scared of like missing the top, having stomached like an 80% drawdown, etc., etc. Everyone we've spoken to has like a slightly different view as to what kind of evidence would be decent when it comes to looking for to at least rotate more towards cash, or just take some risk off, not looking for the top per se, but like, turning points in the market more or less. One thing that we wrote about is like checking what kind of impact news has on price. So like if everything's juiced, then there's a bid. If the good news hits, we expect price to go up, and if bad news hits, just like a gift, kind of buy the dip opportunity for people who want it. And if that dynamic changes, so good news stops being good and bad news starts being bad, that could be a bit of a sign that, hey, maybe things aren't as strong as before. That's our view personally. Do you have anything in mind at any point in the market cycle where you're like, okay, things are getting hot, and maybe if XYZ red flags start to creep their heads, I'll be a bit more careful than I was previously? Even vague stuff you look at?
Yeah, the first time that Elon tweets about Dogecoin and it doesn't go up, like, you got to get out. It means you got problems. Like, I'd say that's like a pretty good top indicator. No, but I think that's the right like idea, right? Like once like the incremental news like starts to like come in and it doesn't like have an effect, like that's definitely a big sign. I mean, like it's also, you gotta like, you'll start seeing fatigue in the market, right? Mm-hmm. Like people will just like sort of like you I don't think you're seeing a ton of it quite this second, but you probably will. I don't know. I mean, like, I don't want to be that guy that like tries to call it top, but like you'll see it at some point where like you're seeing like massively like either positions like getting like unwound and like very little like people looking to like come and like snap that up, mm-hmm. or just like volumes start to like drift off on like certain names, and like just like the general stuff of like showing like malaise and like apathy in the market. Because like look, like we've been going 1,000,000 miles an hour now for call it 6 months. Like yeah. Like people do like slow down, and like people also like take profit. And, like the other thing is like people might find something else, right? Like something else might get hot. So it's like what you really want to look for is like, I guess like the problem with that is like everything is hot in the world right now, but like you saw this in like 2015 with like Chinese equities, right? Where like in particular in Asia, like everybody stopped trading crypto and like went and like traded like all these IPO stocks in Asia. Right. So like stuff like that can be like a big indicator. If like people start talking about like other stuff, like I don't know, if it's like suddenly like everybody's talking about, I don't know, like random like Pokemon cards or something like that, which I think is like also hot. Then you got to like watch out. Yeah. But so that's definitely where we like sort of look, is like just like general like apathy in the market, and like we also look at like funding rates, because I said like you can get a feel of like if people are like too over levered at any given time, which is something like you got to pay attention to.
Awesome answer.
Yeah, I find it funny. The thing you said about Doge, something that I've been watching as well, and the last tweet that Elon made about Doge with like buying some for his son, actually got full retraced pretty much right afterwards. So I mean,
right. Like, I mean, then that goes to show you, like, I don't know, that it's like just traders. It's not like real flows.
Yeah. So I mean, I wouldn't necessarily want to be calling tops on Doge, just based on the fact, like, I mean, we're in such a weird situation where it's just like these memes just do so well, right? The GME meme did so well. I mean, it ended up poorly, but I mean, the rise of it was insane. And I mean, Doge is just a perfect meme, right? I don't think there's anything as perfect on any market really that is such a perfect meme. So I wouldn't want to be shorting Doge, but that is definitely something that would have me worried if I was still like holding a shitload of Doge. Just the fact that it cannot hold that level. But yeah, we'll see.
It's always fun to watch where crypto native flows go, like Dogecoin, XRP, right? Or like non-crypto native new money goes, right? It's always those. I don't even want to call them blue chips, right? I guess famous fiat on-ramp coins like XRP and Dogecoin. But yeah, complacency, apathy, news not really getting taken advantage of, all of that, incredibly helpful. Dan, you've been also very generous with your time, and it's been an absolute pleasure to catch up and actually chat for the first time, which is always interesting.
It was good.
Any final messages, bits of wisdom? Where can people find you? Apply to be an intern, donate, give money to you, buy you cookies, all of that kind of fun stuff.
Yeah, I'm still trying to get the cookies to Mason. It's actually been like a structure. I think they thought I was messing with them when I first bought them, but like I've had like 5 phone calls with like the Girl Scouts related sort of folks. But yeah, that's a mistake. I mean, I'm on Twitter. That's like the best place. Like I try to respond to DMs here and there. I'm probably not great about always like following up on stuff, but yeah, in general, that's like sort of. There's an info at CMS Holdings too, if like anybody like has some very pertinent thing that they want to like get to us about. Yeah, that's it. No, it's been good talking. I mean, we'll definitely do it again sometime.
Absolutely. That's all from us. Thank you to Bybit for sponsoring the show. Thank you to our audience. Hope you all have a safe, productive weekend, glued to the charts, looking at your favorite altcoins, hoping your breakout isn't a fake out. That's all from us. Follow Dan at CMS Holdings. Usual, subscribe, whatever stuff. Not your first time on the internet. And we will see you on Monday. Dan, Duck, thanks, guys.
Awesome.
Thank you. Bye-bye.